This is the briefing for Friday, June 12th. One of the things that I have experienced in my trading myself is that, especially in the current environment where the market basically is moving on news events, it's very difficult to strategize for one event occurring over another in the coming trading days, this being Monday's trading. And certainly we had a news event over the possible settlement with Iran in the Middle East. Uh, but on the other hand, that could change very easily, and the market reacted very positively to it, but not as positive as I would have thought that it would have. For example, you can see that this is the move down from the all-time highs that we've been looking at and analyzing these counter trend rotations to determine where the next level of support would be. And coming in right on the spiders, right at the 725 level, you can see tested here. Buyers came in and drove price back up. Buyers came in here, buyers came in here. So you can see all those buying tails, how buyers have stepped in right at that 725 level. And then, of course, in today's trading, we made a slight new high over yesterday's high, and of course spent the rest of the day in rotation. The same thing with the Qs. You can see this 695 area. You can see the buying tail here, and then a couple buying tails right here as they tried to drive price back down. Sellers capitulated and buyers drove it higher. Once again, we took out the previous day's high, but spent the rest of the day in rotation. Now, I happened to have this resistance level set up right at the 723.20 area, which is this high right here. So the previous the previous lower high. And you can see that stopped it right at that same level in the Qs. So looking at the IWM, that was the only index of the three that I tracked that made a new all-time high in today's trading, which was very, very interesting. So the mid caps basically, or the small caps, I should say, basically feel that there's more bullishness in the air for them than there is for the other S&P 500 and the NASDAQ. One thing to keep in mind is you can see this move here. You can see the new high put in above the previous day's high, but look what happened with volume in today's trading. Volume in the spiders just fell off pretty significantly. Market breadth expanded 289 shares out of 500, or trading higher as opposed to lower. In the NASDAQ, not very good. Breadth declined, so we've got a pretty good divergence between price and breadth in the NASDAQ. And you can see volume in the Qs fell off pretty significantly as well. The same thing with the IWM. While it did make a new all-time high, volume was pretty low, as is breadth pretty low as well. So really, there's some strength I need to point out in terms of the move in today's trading, but it was not as strong as I would have expected it to be. And I think that maybe the big traders are sitting back and waiting to see if things change over the weekend before we start trading on Monday. Looking at where we are in terms of the daily charts, you can see this is this three-step counter trend rotation that I talked about in last night's briefing. And you can see we almost came down to equality where there's equality between legs 1 and 3. Bounced off of the 727.5 area. And then I don't know if you can see this, but there's a buying tail and there's a selling tail. So that basically says that neither buyers nor sellers could gain control of the market. As you can see also, volume in the spiders on a daily basis ticking up slightly, but that's on this move to the downside and then falling off on this move that we saw going back to the upside over the last 2 days of trading. 52-week highs minus 52-week lows ticking up. Breadth once again in the NYSE. This is not S&P breadth. This is NYSE breadth. Only 840 shares positive, and net volume ticking down in today's trading as well. In the Qs, you can see basically came right down to this 685 area, bounced off of that. Buyers came in, tried to drive it back down through this 695 area. And then, of course, over the last 2 days, we've seen buyers come in, volume falling off. You can see the divergence in volume, only 421 shares positive in the NASDAQ today. That's really not a very strong showing for the NASDAQ. And the IWM, you can see, made a new all-time high. And you can see, but sellers came in and drove it back down. So it's going to be very, very interesting to see what happens on Monday with the Russell and the IWM as well. Looking at the overbought and oversold condition, you can see that we're approaching an overbought condition in the NYSE, but that certainly does not preclude the market from going higher on Monday. And we got a divergence with the NASDAQ. We've got a higher high, and you can see that that because of the market internals, which this indicator is based off of, that it suggests that there's a divergence and the market internals are not as strong as price would expect to be. Even a little bit of turn down short term in the NYSE as well. Total volume, you can see total volume on the NYSE falling off. Net volume, you can see falling off slightly. We got a little bit of the trend in net volume was down, and we've got 3 days, three days here where we had a break of the trend. NASDAQ net volume, you can see, is really declining, or was declining, as the market was reaching new all-time highs. And then again, of course, we've got this decline once again. But I could also put a trend line like this, which would suggest a strengthening in the NASDAQ. And you can see that volume in the NASDAQ has picked up pretty significantly, especially from where it was back in this area here. So basically where we are is that I am very cautious of whether we're going to see follow through on Monday's trading in terms of going to the upside. The market internals are strong. That I'm going to qualify that they're strengthening, but not to a degree that I would expect to see based on at least what the news event was. And I think that there's probably a lot of traders out there who feel like I do, that this is just a very, very good time to be cautious. So I am cautious over what's going to happen the first part of next week, maybe Monday or Tuesday. And I think we'll see. Now, if we begin to trade above these resistance areas that I have marked, then that's going to change everything and suggest that we are off to the races, and we will make new all-time highs in the S&Ps and in the NASDAQ. One other thing I want to point out, and I pointed this out when it was negative, I want to point it out now also, because it's not as negative. This is the percentage of stocks above the 20-day and 50-day moving average for the S&P 500. And you can see we got a nice bump in that in today's trading. Nice bump in the 50-day moving average as well. Percentage of stocks above the 50-day moving average. NASDAQ not as good. So you can see NASDAQ, we got a little bump up in terms of the percentage of stocks above the 20-day moving average, and a little bump up in the 50-day moving average. So not as much strength in the NASDAQ as I would have thought there would have been. And then, of course, the Russell had a nice bump today, especially based on the fact that it made new all-time highs. But keep this in mind. You can see that here's price in the IWM. Here's what's happening with the percentage of stocks above the 20-day moving average, and you can see even in today's trading, there's a pretty big divergence between where price was here and where the percentage of stocks was above their 20-day moving average here. And going back also into the NASDAQ, you can see the same thing. Look where price was right here, and where the percentage of stocks above the 20-day moving average was, and look where it is in today's trading. So really, while there's a little bit of strengthening coming into the market, it's really not significant enough for me to say that the low is in and we're going to see the indices moving substantially higher. Right now, I'm questioning this. We're going to be watching today's low very carefully on Monday, because if that's taken out, that's going to suggest to me the probabilities are increasing that we're potentially going to see a test of this low. On the alternative, if we trade through today's high and the market internals are strengthening stronger than they were today, that's going to suggest that this is the low is likely in, and we're going to see potentially a test of the all-time highs. Have a great weekend, and I'll pick this back up again on Monday.